you have two choices. You can either sort of sweep it under the rug and not communicate with anyone, hoping that things will get better,
And
or
they don't.
you're trying to save you some embarrassment. Because, I mean, admittedly, that would be a pretty embarrassing situation to find yourself in. But the alternative is bankruptcy, winding up,
Yeah.
people chasing you for money, all of that
100%.
other stuff. It's worse. Hello and welcome to another episode of the Money Matters Podcast. This is PJ Patterson, founder and CEO of Intrepid Wealth. I am joined today, the whole day, we're doing a whole bunch of episodes actually today, with Melissa Kuterich of Diva Enterprises. She's an educator, advocate, risk mitigator, and a specialist in financial coercion, how to spot it, how to deal with it, how to protect people from it. And we're going to go through, welcome back, Mel, first of all.
Thank you.
You haven't left, but welcome back anyway, right? We're going to talk about a case study. So we've been going through a whole bunch of broad topics around nominated directorships, why you need to be on the lookout for those things, talking about corporate coercion. And now we're going to try to bring it into a real case study and an experience that we're going to talk through. And at the end of it, we're not going to leave you hanging. We're going to make sure that if this episode sparks any of you to think that maybe something like this is going on in my professional life, in my relationship or whatever, some practical things that you can do to protect yourself. Yes, we're going to do that. I'm excited about that. All right. So set up the situation for us, please, Mel.
Okay, well, we have a couple that have managed a business, a successful business together. And what has happened in the background was that clients had been moved over to a new entity. The issue here is that the partner did not know that this was occurring. So what then transpires is once the customers have gone, the obligations are still left with her company that she is the director of.
So just to be clear, they took the customers and moved them without the knowledge of the
partner.
of the main principal.
Yep.
And in the old entity have left things like what? Payroll?
Payroll, all the entitlements for the employees, ATO, BAS, etc. They've got different kind of obligations too with suppliers as well, and all of that as well. The thing is that now the main paying clients have moved to another entity, and what has happened here and why it was so easy for this to occur was the fact that the name of the new entity was very similar with only minor differences. So the clients didn't think much of it. They all moved across. She had no idea until the fact that things changed.
There's no money in my bank account all of a sudden.
There's no money. There's no invoicing done. There's nothing. And then she gets the notification from the client that they have been paying. However, they've been paying the new entity. So in that particular instance, it was done in such a way that was so concealed and inconspicuous that you didn't have time to actually think, hey, something's not right here.
So this would be a unusual situation, I think, where someone has planned this. Like this is a premeditated, I'm gonna
and I was
do something
just about
right.
to stop you there and say, unfortunately, it's not just a one-off situation. It occurs so much, many times. Many times that this has occurred. It's all been swept under the rug. It's not really known, and when you are going through it, you don't believe it. It's so much disbelief. That's the thing. But yes, this occurs more often than we even know or suspect.
And we don't probably know the full ramification of this because, well, who's going to put that on their census form that I got screwed over in a business, right? Or
No.
where's the stat going to show up, I guess. So so just on that, what you're saying then is, if I'm hearing you correctly, is this kind of thing is going on more than we know or more
or
than we
speak
would
about or
Yep.
know or get reported on.
Okay. Well, that's really not good in and of itself. So there's a likelihood then that anyone listening to this, they might know someone or they themselves could have potentially be embroiled in something like this that's going on, where a partner or they're in a business and someone is shifting business assets around, leaving liabilities in other companies, setting you up to be the fall guy or girl, and take it from there.
Yeah. So this does happen quite a lot, and it is inconspicuous. So yes, you could be set up unknowing, unwilling to even, you're not a participant of it, clearly, because the benefit and the agenda had been there all along. And let's face it, we all have some sort of an agenda, but no one's able to mind read, are they?
I'm still working on that. I'm have not been successful.
Not possible,
No.
I don't think.
No, it's difficult.
No.
Okay, so we've got a business now where the clients have gone to another entity. We have all the liabilities left. The partner has absconded with the new clients. What's happened next?
So what's happened next is, as I said, no funds are coming in. Everything has now shifted in such a way that, okay, what's happening? The client is contacted as to, well, why haven't you paid your invoice? And the client has then said, we have paid our invoice. And they actually send through the invoice and it shows the new entity. That's the way this was discovered. And a lot of the times this is the way it's discovered. It's when it all turns bad or everything is just not conforming any longer. That's when you discover that this has occurred. What needs to happen then, besides removing that emotion, which is really difficult because it's obviously a partner, is that you do need to report it to ASICS. You do need to report it to the ACCC, because generally what happens is all of the clients will be moved. You are still liable and responsible for the ongoing obligations, for the tax, for the debts, for the suppliers. So even though everything to a point was from the initial entity, the new entity that has now taken the clients, they've received all the funds that were meant to go and pay for all those liabilities.
So what do you report to those entities like ASIC and the ACCC?
You actually do report the fraud. Now that, especially now, coercion has been named as a crime. So you do make that report. You do let them know that the transfer of clients and what has occurred was not your doing, was not authorized by you.
And what do they then do about that?
ASICS will generally investigate and they will send a notice out to that director of the new entity.
It doesn't stop or do anything to immediately interrupt the suppliers still being in the old entity and that sort of stuff?
No.
Okay. What can people do then, or what even did this person do in that case to speak to the liability side of the balance sheet, the entitlements, the suppliers, the whatever? How was that addressed and dealt with?
It was addressed in writing, first and foremost, after the conversation, which explained what had occurred and without her knowledge. And however, this is what is going on at the moment. The company was still, obviously, obligations and so on and so on. She actually retained another 20% of the clients that had moved across and continued on, made payment arrangements. She was still liable. It ended up then, it's still, now I believe it'd be still in court. So yes, it's illegal. It's illegal to do what had occurred. but she was able to rectify the situation as best as possible to also protect herself from the ramifications of what had happened to her. So I always say it's the perception, the prevention, and the protection that goes on in these matters, and that's exactly what has to happen. You have to make that decision to actually let people know. It is a gamble sometimes, because obviously clients are going to think, well, we don't want to get it's all too messy, we'll go elsewhere. But what you find is that majority of them will understand and will either make that call themselves, will either stay and finish off the contract with this company, or will move back to where we were, and they can actually start action.
Mm-hmm.
They can join the action, I should say.
So I want to be clear on that point, because what you're saying is that, I think what I heard there is that you have two choices. You can either sort of sweep it under the rug and not communicate with anyone, hoping that things will get better,
And
or
they don't.
you're trying to save some embarrassment. Because, I mean, admittedly, that would be a pretty embarrassing situation to find yourself in. But the alternative is bankruptcy, winding up, people chasing you for money, all of that
100%.
other stuff. It's worse.
You're always better to be proactive in these situations. Remove the fear element and the what ifs. The what ifness should not exist. Because truthfully, if you don't do something, you're the one that's going to be stuck. And again, it stays on your credit file. It stays there for a long, long time regardless. It's always better to show that. Now, I always say that in various situations, if for instance she found herself where she couldn't continue on and she would have to close the company, she would need to specifically and be very, very detailed in reporting this to an administrator. Making that report, know that she has the right to do that.
So in this case, if that was the chosen pathway to say, well, it's just not ever going to resolve the way I need it to, you would approach an administrator to wind up the company and provide all of this detail around the circumstances?
If it was at that point, that critical point where you had no way of making any of those repayments or, committing to your obligations, well, then that is your only option. You need to close that company. You can't leave it open. And you can't just close it because there are so many liabilities with it, as you know. But, as I said, there are ways to report this and prevent and stop the person from continuing to hurt you in a way that is swept under the rug or deemed legitimate.
So let's talk about a few of those ways right now. So what are some of those ways?
First and foremost, didn't I just cover that?
We'll just cover them one more time.
Okay. Oh my God! Now I want to laugh.
That's
And
okay. That's your ego that wants to laugh. Okay.
Oh my God.
So you think okay? So you think we've just covered that stuff?
Yeah, that's what I thought we did.
Okay, that's cool. It's a good thing this isn't live.
Yeah.
Actually, that would be fun if it was live. Okay.
Thanks.
What do you
I'd be
want to?
throwing
What
things at
you
you.
would be? I have that water on me right now. So what sort of do you want to bounce to next in this topic then, on this case study?
Okay.
You want me to ask you a question to set it up?
Yeah. If, for instance, the partner has put your name on the new entity as a shareholder just for appearance sake, what would you need to do? Or even if the person is, I'll explain that part.
Okay. So let's say in this new entity that the partner has included you somehow in the entity. What might that look like, and what would you do to discover that and then to deal with it?
Okay, well, again, you would do your ASIC search which would be a standard thing to do anyway once you've been notified that this has gone on. What you may find is that, yes, you have been intentionally or purposely placed somewhere in the company, which is generally only for a short time, just for appearance sake. What you would need to do is then make the inquiry and resign. Definitely remove yourself from that entity. Make it known, make the report. And you can do that through ASICs.
And so if you were a shareholder, can you resign as a shareholder?
You could remove yourself. You could explain why that was done. And I would say that's the first thing you would do.
Okay.
Because it legitimizes what he's actually done.
And when you say legitimizes, so what would be one of the reasons why he would have put her on as a shareholder?
Well, it could be for borrowing purposes, for obtaining finance. Could also be to have that perception that this is just a name change or a structural thing that has occurred and a decision that was made, so that's why it happened. So then clients would feel comfortable to actually move across.
Would it be something that if you were setting up new banking arrangements and you were going to take a bunch of money out of the company, for example, that you would say, oh, no, the partner or the wife or whatever, she's a shareholder in the new entity, so it's all okay. Nothing to see here.
Yeah, it shows that link between, the benefit that she's still in there. Yes, that's definitely it.
Okay. We were talking about this in a previous episode around the ways you can get alerted when things are changing around directorships. I don't know that a shareholding would be notified, but it could be. But certainly directorships are in any other sort of credit file type stuff. And that's to actually have something like Equifax, or I think there's a few reporting agencies where you can get alerts on anything that hits your credit file. Would that have been maybe one thing that might have been triggered if...
Oh, if she had something like that back, from the onset, yes, of course. Of course it would.
Would have shown up. And that might have been a
yes, it would
warning,
have been,
warning.
It would have been a warning.
Mm-hmm.
But unfortunately, it rarely happens. And
the people have that service, you mean, or?
Well, it rarely happens that people think about needing that service.
Mm-hmm. Mm-hmm.
When they set up a company together and they've been running this company and it's been, building up, and then it's built up to a point where all of a sudden things change, as they do, and without warning, it was planned and constructed in such a way that it was so out of the blue, and yet it wasn't.
So I'm assuming these two are not friends anymore.
No, definitely not. And it gets even messier because of the fact that, they had joint accounts and so on. And there's a segue into another session. But yes, they had joint accounts, and exactly that reason that you just said, because she was somehow linked to the new entity, it enabled him to wipe out the accounts.
So he's been able to take cash out of the previous business that was set up and move it into another bank account?
Yes, into another bank altogether.
And are we talking about a couple of $1,000s? Are we talking about substantial sums of money?
We're talking about significant amounts of money.
Hundreds of thousands type.
Yeah,
Mm-hmm.
It would be something that if something like this happened, I actually questioned this because I thought you can't go and withdraw $10,000 without being questioned or explained. But yet this to be allowed, and no one even thought, hey, this doesn't seem right and it's not the standard behavior. And it was just ludicrous.
It is an interesting point because, of course, I get alerts from time to time on my phone from my bank in relation to credit card charges that are like, $50 or something from some weird place in Europe or wherever. Well, I appreciate it. I'm not, I think it's great that they're monitoring that. And that's a very small transaction. I mean, obviously they are aware of a lot of the fraud that takes place in the credit card space. But it begs the question, why isn't the banking industry maybe tackling this in a slightly different way? Maybe they are. I don't know. Would you like to comment on that?
First of all, I think
I know you would like to comment on it.
Yes, but I can't. First of all, I think this segues into a complete different.
We need to have another podcast on that.
Exactly.
Okay. All right. We can do that.
Yeah, but I can say this. The fact is that, as I said, it was not something that she was alerted to. So you don't hide your phone. You are joint. You can both get on to online banking and you can switch off alerts, can't you?
Sure.
Yeah?
Yeah.
It's exactly what happened.
Unbeknownst to her.
Unbeknownst to her. So that's why I always say, yes, there are things the banks can do, and they can actually insist that each person has their own individual ability to have alerts on there, regardless of it being joint. Something somewhere, it's a misfit. Something has to be slightly altered so that it does prevent situations like this, where a partner that you don't suspect can change and alter things in order to enact certain things that are illegal, but are sometimes very difficult to disprove and also defend.
And I imagine it'd be difficult to defend and unwind because now all the cash is gone. So how are you going to engage a lawyer and other professionals to help you if you don't have any money? Right?
And that's the sad part of all of this. The vulnerable position that especially this person, but all people are left in this situation is just awful. And there's really no one to support them or help them. Because if you can't pay someone's time, what can you do?
Something that just came to mind, and I'll throw this out as a possible solution for this, and this probably should be used regardless of the status of your relationship. I mean, you shouldn't probably be in business with people that you don't trust or know or like or whatever. But certainly we have multi-factor authentication now. We have authentication. We have one or two, and sometimes even more with some banks, I suppose, signatories have to, be sent an alert to sign off on a transaction. I'm guessing in this case, probably one person to sign, which is why he was able to do that. So even if they had two people to sign, which meant that she would have gotten an alert on her phone to say, $100,000 is coming out of the account.
Sorry.
That's okay. If she had gotten an alert on her phone, that said $100,000 plus is coming out of your account, she might have gone, hang on, why? Right? So I presume that could be a measure, just as a matter of prudence, that everybody should have on their account. Because fraud is also ubiquitous now, right? So somebody could hack your computer and stuff.
That's what was so interesting about this transaction, is the fact that the bank has the ability to see the behavior and the patterning and everything else of their previous transactions and just their history. Knowing that this is not normal behavior, the first thing you'd think of is this is probably a scam. But it went through. And yes, well, I agree with you, and we can talk on that some more. It is not done. And that space where it's joint accounts, and whether that's in business or in, a intimate relationship, that is a very, very grey area. The defense that's usually used is that they go back to their e-banking systems and, regulations, and they'll say that they've done nothing wrong. Well, it's a different avenue and aspect. When you look at it, it's still intimate relationship coercion. So it's not just a matter of saying that, we've done everything compliant by everything that you've signed up for, that you've agreed to, one signatory, so on and so on. It's not a matter of that. If this was just a normal situation, yes, you're right. It would look like a scam. Someone's trying to rort your account. So, yes.
So this is still ongoing, this particular case that we're talking about today?
This one is still ongoing.
Well, once it gets resolved, we'll have to do another episode on what happened.
The outcome will be interesting.
Yeah. How long do you think that's going to be?
We are not 100% as yet because the family court hasn't yet been involved in this matter. So there's a lot of different stages this woman has to go through.
All costing money.
All costing money, and right now it's more to the point that the bank really needs to look at how this had occurred as well. But the best thing that happened is that she contacted everyone, she made it known, she reported it. And that's the biggest thing. Because you've got to imagine, this is also very emotional. You know, it's something that you do want to curl up in a corner and just sit there or disappear. For a while.
Just for a while. Well, these things are shocking, and I suppose there's blame, there's what's happened, why did I not see this, all of these emotions and things you go through. And I guess the moral of this story is, and we've been talking a lot about this in the podcast and things we've been talking about around coercion, is, and correct me if I'm wrong here, but I think it is that you need to take action as quickly as you can. Get over that emotional, thing, that reaction, which I would expect everyone to have. But then get into a state of, okay, I need to now do something. I need to start talking to professionals, reach out, and try to stop it from getting worse. Is that a fair thing to say?
100%. I always say the hard part in these situations is the fact that it's you. It's happening to you. Sometimes the easiest way to look at things is by placing yourself as though you are defending a loved one, someone else, trying to look at yourself as a third person so that you can articulate what has just happened, move forward, take that step, do what's needed, and then you have time to collapse. I know that sounds awful, been there, done that, but you need to, because the ramifications of you not doing something are even more horrific.
And it sounds like time is of the essence in these situations. So
yes,
get on top of it straight away.
Yes, 100%.
Well, on that note, there's light at the end of the tunnel. Take action. There are people that will help you with this sort of stuff.
Yes.
And that's the good news of all of this. So, Mel, once again, thank you for being on the Money Matters podcast and talking about coercion.
Thank you.